Okay, day 16. Today I wanted to give you a case study on an industrial development that I did. Now, I would not suggest doing developments if you're starting, but what I wanted to do was give you some perspective on how I think about industrial investing. And really what you can then do is take some of the lessons that I'm going to give you and some of the principles and apply that to your own. If you end up going down the path of industrial properties, then you can use some of these foundational principles for you. So this is a case study where my partner and I did 37,000 square feet of small bay industrial condos. Now, an industrial condo is just, don't get too caught up on it, but basically what it means is we put a condominium plan on it and sold off individual bays. Just like in an apartment unit, if you take an apartment and then put a condo title or condominiumize it, you're able to then sell off individual apartment units. So that's all we did. We had 24 industrial condo bays. They ranged from about 1,400 to 1,550 square feet. So they were small. I would not do that again, but we wanted to get our price point under 500,000, and so that was the way that we had to do it. We tested the market. So when we went out and our agents, actually, we found kind of agents that were very connected to the community that we were selling into. And prior to removing conditions, we had 70% pre-sales. So we were very comfortable. And when I say pre-sales, we actually had purchase and sale agreements with checks in our lawyer's trust account. So we did a few things. We verified the demand. We looked for a gap in the marketplace. There was nothing in Calgary at the time that were that small in terms of industrial condos. Now, that might tell me that there's an opportunity, but it might also tell me that there's no demand for that. So we had to verify it with purchase and sale agreements. We had multiple tenants, so we were not reliant on one buyer for all 24 units. That we could get into that in another day, but you can just imagine if you've got one buyer, if that buyer goes away, you've got no buyers. So the price point that we were selling at, we knew that we could get rents to justify that development. If you don't understand that, then don't worry, because quite frank, I don't want to get into development because, like I said, that is a very advanced level. Just understand that if we couldn't sell them, that we could rent them out and still get a reasonable cash-on-cash return. So what lessons can you take from this if I'm telling you about a development case study? A few. Number one, multi-bay industrial. There's a picture that I found online. I literally just Googled it. They're a very reputable developer, and this is kind of like a model that I like, because here is a $5 billion company that is developing this. They must know what's going on, and they do. I like tenant sizes of about 3,000 square feet on the small end, up to kind of 7,000 to 10,000 on the higher end. You would have to talk to the brokers in your area. I'm giving you kind of a broad understanding of what I look for, but I don't make the market, so I would go into the marketplace and ask the brokers, what do tenants want? Where is there a gap in the marketplace? Where is there more demand than supply? So I would ask those questions, and then I would look for properties that met those conditions. I like minimum 20 foot clear. I like 24, 26 foot clear. That was in yesterday's post, if you don't understand ceiling height. I look for great locations, accessibility. Visibility is even important now, because what's happening is more and more are the industrial users like to have their customers come and visit them, which also means then you're going to want to have a little bit more parking. Back in the day, you might have got away with 2 per 1,000, which is basically 2 stalls per 1,000 square feet. Now you're seeing that go to 2.5. I mean, on the development we did, we were over 3. But that was because we were quasi-retail. We knew there was going to be a lot of draw based on our location and the size of the tenants. So, and I guess the other thing I would mention is I would also look for, if possible, barriers to entry. And barriers to entry is really where you've got even though I suggest looking around to find other developers, because that is going to tell me, yes, this is a growing area. So I like that. But what I don't want to do is I don't want to go into a growing area where there's 2,000 acres of land to be developed, because what that invites is a glut of supply. And what you'll find is, because you can develop industrial properties for usually fairly inexpensive, and I'll call it like the big boys, the groups out there that have very deep pockets and low cost of capital, they're able to come in and flood the market if they so desire. So I would be looking for kind of infill locations with higher barriers to entry. So it would be very difficult for them to bring on too much supply into the submarket that I'm looking at. So those are ideas and concepts. There's a write-up, but I thought I would just give you some of my own personal thoughts and experiences. I'd stay away from single tenant, and I'd stay away from specialty purpose buildings, mainly just because if you lose a tenant and you're not, even if you've got a very reputable and financially, like their covenant is strong, it doesn't mean that they don't go to business, and it doesn't mean that they don't move. And so if you've got a building, and I've seen this so many times, especially in industrial, where you've got a very specialized building that was geared to one tenant, and when that tenant leaves, it can take years to backfill. So I would just suggest, if you're new to investing in industrial development, stay away from that. These are some principles and guidelines that I follow. I'm not telling you what to do. I'm just giving you some concepts. So don't take this as investing advice. Do your own homework, do your own research. I'm just giving you things that I look for. Like I said, if you're in your market, talk to the agents that are doing the leasing and the sales and find out what's in demand, and slowly build a case for where you're going to invest. So you've got the homework. I'll see you tomorrow.